Hey there everyone, it's Joe from Ainslie's Gold Silver Standard Insights, brought to you by goldsilverstandard.com and ainslieBullion.com.au. Today's topic is, do they really want to reduce inflation? Now that's posted on the Ainslie website. I'll put a link below for you to follow along. And of course we have Chris Tipper here to break down the morning's news. And joining Chris today is regular contributor and data analyst extraordinaire, Josh Lang. So gentlemen, over to you.
Thanks, Joe. Well, last night was the first look at the new federal budget here in Australia, with some pretty optimistic falling inflation expectations built in. Those projections were challenged just this morning with the latest inflation print for Australia coming out at 7.3%, which was hotter than expected and significantly higher than the previous 6.1%. The discussion in today's news raises further questions about how realistic these budget expectations are when you consider that the RBA and other central banks may have an incentive to keep inflation running hot as a solution to record global debt. Of course, they can't have the numbers too high, as that introduces a risk of losing control completely, which is why we'll see continuing aggressive rate rises for now. But when they slow down that rate of change, there is a chance that inflation still hangs around at historically high levels for a long time to come. So to explore all of this a little bit further, we welcome Josh back today after completing his most recent deep dive on the current state of the inflationary environment. So thanks for joining us again, Josh.
All good, mate. All good.
So my first question to you is around those numbers in Australia that we got this morning. So can you just give us a little bit of background into what you thought about those numbers and what you thought they were telling us?
Yeah, so Chris, you touched on it a little bit there, but the ABS came out saying that CPI jumped by 1.8% in the 3 months leading up to the end of September, with new housing and gas prices fueling majority of that inflation. So this came as a shock to the market, which forecasted a smaller increase of only 0.4% instead of the 1.8 that we got. And I mean, we're at 7.3% inflation, which is just crazy to think about. We had the Treasurer in his budget speech acknowledge inflation is predicted to peak at 7.75% later this year. But that's just a stone's throw away at this point. So I think the sirens are starting to go off for everyone now, that surely the hikes from the central bank have to continue. I mean, we've mentioned it in a video a few weeks ago that the RBA pivot, that's kind of not really a pivot, but, slowing the rate increases might have been a mistake. And I mean, here we are with higher inflation still. So I'm not sure what your opinion on that is, Chris, but I think we're looking pretty likely to see the RBA go back, maybe even to 0.5% increases again.
Yeah, that does seem quite possible. I actually have been thinking about this a lot this morning and had a couple of different conversations with different people. And it's quite interesting when you look at the US situation when they're talking about 0.75%, and then potentially another 0.75% in December. So if you look at those high numbers and go, it makes our 0.25% last time really small, but then
it's nothing.
Where do they go from that? So sort of like, well, in the US, do they have to then go to 0.5% and then 0.25%? So maybe originally I was thinking, wow, we've really missed the boat here and done this wrong. But maybe we continue at 0.25% or even 0.5% for a longer period of time. We do play catch up, where there's a significant risk in the US, I think, because if you look at what happened, the moment anyone hints any sort of slowdown is coming, the markets have taken off, which is what's happened over the last few days. And that seems to be counterproductive from my perspective for what the Fed and our central bank is actually trying to achieve.
Yeah, for what they're trying to achieve, I mean, we're still seeing inflation accelerate. We see the next RBA meeting on Tuesday, so I suppose we don't have too long to wait to see what they decide to do. But I did see the forecast is still sitting at 0.25% increase. So we'll see. Will it be half or quarter? I guess we'll find out. But again, we've also got that hidden inflation sort of in the weakness of the Aussie dollar as well, which is currently just under, I think I looked earlier this morning, at 64 US cents. So there's no doubt they're probably taking that into consideration with what they do too. We can't just destroy the local currency throughout whatever this process is as well. And I just keep thinking of that situation that happened with the pound. I just do not want to see that here.
No, absolutely not. And that is concerning. And like you said, hidden. It is a little bit hidden because people don't necessarily see that correlation, but we will see that correlation as we continue to buy things inevitably from overseas.
Exactly.
So just changing the topic slightly, Where do you see wages fit into this? Because we've got these inflation numbers clearly very high, and as we've just argued, potentially high for a while, and potentially not going to be as optimistically falling next year as the budget might suggest. So if that stays high and inflation coming in with the Aussie dollar, things you just mentioned, where does that leave us with wages that from what I was hearing last night and this morning are not looking like they're heading up anytime soon?
Yeah, the dynamics between wages and inflation is actually a bit more tricky than most think, and certainly more than what I even thought. There's multiple different scenarios, variations in which wages, inflation, the two can sort of affect each other. So wage growth, obviously, a big topic at the moment because cost of living going up. It's actually a driver of inflation as well, and increases. It's a big part of businesses' costs. So if wage growth exceeds the productivity of a business, margins and profitability go down, which can also lead to inflation. And because inflation's already high, the relationship between wages and prices can cause inflation to remain high. So, they keep saying a quick fix. I can't see that happening. With workers often asking for larger wages to counteract the inflation pressures, it just means that they end up having more, I suppose, disposable income to sort of keep driving money into the system, which is counterintuitive to what they're trying to achieve. So they're trying to compensate for their declining purchasing power, which is causing firms' profitability to decrease, again, leading to the situation we're in, which is inflation and businesses slowing down. So I looked it up. It's in cost push inflation, which arguably we're in now, where firms are facing higher non-labor costs since our wages actually aren't increasing at the pace of inflation. And that reduces their profits and erodes their ability to pay those higher wages. And as a result, firms, businesses raise their selling prices to maintain margins, which just, price is increasing, which increases that inflation even more. So we need to remember that in order to tame inflation, spending needs to slow down. So you can't just keep giving out more income because we need spending to come in. So while debt is really expensive at the moment, like I said earlier, that disposable income is, if they have it, it's still being injected. So people are more willing to pay more at the shops. And it's kind of against what the central banks are trying to do, which is slow that dynamic down. So, in many countries, inflation is historically at historically high rates. I think the headline today was highest in Australia since 1990. And the labour market it's exceptionally tight, and wages growth is only just picking up. So there's a risk that we actually have a wage price spiral, which could emerge in some economies, a situation where wages increase, which causes prices to increase, which causes wages to increase. And then you just have this positive feedback loop, which just sort of doesn't solve inflation. That's why I just cannot see how it's a quick fix. It has to be over a long term.
It definitely does have to be over a long term. And I think part of that we need to remember is that you don't get a wage increase every week. Wage increases are usually calculated. They might be annual. They might be involve some sort of discussion between the employer and employee, that negotiation that goes on. So when we talk about lagging indicators, wages are
way behind.
Well behind. And when we might, exactly as you highlighted, we might be starting to get inflation to come down, but then it gets hit with that next wave of wage increases that might have actually been 6 to 12 months in the making. So
it's something that these people needed a while ago. So
it really just adds this idea, I suppose, that you can't think any of this is a quick fix. And some of the discussions I've been having this morning, people are seeing that little bit of movement in the share market and going, oh, it's a bull market. The pivot's coming with everything is good. And you go, well, maybe, but we've also got to realize that this hasn't all played out yet, and actually could take years to play out. So you really can't be looking at it day to day necessarily to make judgments for the longer term.
I think some of the more realistic actual expectations are end of 2024, and I'd even question if that's too soon as well, considering it's still accelerating. We haven't stopped it yet. Yeah.
So there's a lot can happen in that sort of period of time.
Oh yeah,
So,
oh yeah.
a lot of insights videos will pass, under the bridge before we get to that. So I suppose to wrap this conversation up, we frequently want to come back to the question of how do we protect ourselves in this environment? Because obviously, if we're seeing that potentially this goes for longer, and I certainly, my opinion, up until probably more recently, had been that it might be a little bit shorter than it is. Now I'm starting to get a longer term perspective on where we're heading. Where does gold fit into this? Because that's obviously something we're interested in, and our people watching this video will be interested in. Can you give us a little bit of background there? Because I know we've had some questions around that too, from the audience and people just saying, well, you're saying that gold should be a good investment here. It's not necessarily responding the way it should. Can you just give us a little bit more background around all of that?
Yeah, I'm really glad you brought that up, mate. We did get a really good question come through our email, so thank you for that. Just asking about the price action. The question is why precious metals haven't increased substantially, even though we're in these high inflation periods with impending recessions coming as well. And I mean, we've already covered in a previous video how the strength in the US dollar has weighed down gold, so I'll spare everyone that argument. But I think what we need to consider is that one of gold's greatest benefits, and a reason why it tends to lag in performance in terms of price, is that it's extremely liquid. So I have no doubts that a lot of large funds have had to sell off some of their gold holdings in order to save positions they're in for the equity market, the bond market. They've just found themselves in these spots where they go, I need to sell something, and the most cost-effective thing to sell is actually gold, because it's just a very liquid market. You can just dump millions of dollars, and it costs you less than having to sell off something else that's less liquid. So, I think as inflation increasingly erodes corporate earnings, hitting stock prices, we will see the performance roll into the precious metal market. And as stock markets tumble further, gold should start reflecting the real inflation in the system at the moment. We know it's in the system. It's just a matter of it rolling in. And it is a fascinating process to watch because it's primarily people's psychology influencing that lagging movement in gold. Investors just, I'm guilty of it too. You just want to hang on to those losses as long as you can. And maybe it'll come back, but eventually you're simply just forced to close out, move into safety. Oh, look at that, gold's going up, I'll go into there. So we've seen it in the 70s, which is arguably like we're in a similar cycle now. It just rolls in and up the price goes. So, gold's always been a patience game. It's just another test right now for those who are in the market.
That's great. So I think that makes a lot of sense from the perspective of it. If all this is going to be a slow process, so is gold's response. Like that's really the summary of what you're saying, isn't it? That
exactly.
It might not be responding quite as we would expect at the moment, but that makes sense against the background of a lot of liquidations and people needing that liquidity that gold provides. So, be patient.
Exactly, mate. Yeah, in the moment you may think what's going on, but every time you look back at any time we've had economic turmoil, you look back and go, yeah, gold did perform. But in the moment, you would have been going, what's going on? Why is it not working?
Yeah.
It's just a matter of time.
We just got to zoom out a bit on those charts.
Zoom out.
Well, thank you very much for that today, Josh. There's a lot you've covered there and it's really useful. And I'm sure everyone watching this will find it really useful and informative as well. So thank you for that. And we'll talk to you again soon.
Pleasure. Thanks, Chris, mate. See you.
Thanks, Josh. Thanks, Chris. And thank you to the audience for watching. Now, if you'd like to continue the conversation with Chris and Josh, head over to the Discord channel. That's discord.gg/gold. They'll be there for the next 1 or 2 hours after the upload of this video. So head over there. It's free to join. You can ask them some questions, get a response, and also tell us your feedback. We really want to hear from you. I always want you to subscribe to the YouTube channel, youtube.com/Ainslie Bullion, for the wide range of informational videos 5 days a week, including weekly Wednesday specials. And while you're on the internet, head over to goldsilverstandard.com. That's bringing gold and silver into the digital world. As we say here at the end, balance your wealth in an unbalanced world. Take care, and we'll see you next time.